This program is brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say at PennyMac, greatness lives here.
Welcome to The Interest. I'm Katie Jensen. Lenders are getting creative in trying to compete in the marketplace and overcome the pricing war. The latest is Guild Mortgage. The national lender says the new program is designed to provide first-time home buyers with a low down payment option and flexibility to make the home their own. Guild's 3-to-1 Home Plus program enables customers to purchase a home with as little as 3% down. As part of the program, Guild provides a $2,000 Home Depot gift card plus additional assistance ranging from $1,000 to $2,500 that can be applied towards closing costs or an increase on the down payment. Unlike other payment programs, the 3% down payment program through Guild can be funded by a gift, such as a wedding present or graduation present. To qualify, borrowers must have a credit score of 620. The program is available to first-time home buyers in the 49 states where Guild operates and the District of Columbia. While first-time home buyers are struggling in today's market, enterprising LOs may still be on the hunt for private investors. Our own Mike Savino sat down with the head of sales for House TPO to find out what's happening in the fix and flip market.
We're optimistic about the future of fix and flips. The amount of houses in this country that need renovations and could be flipped is huge.
Private investors may be taking a cautious approach to see how the housing market plays out, but that doesn't mean that they're not looking for opportunities. And lenders like House TPO are ready to work with brokers who want to break into this market.
So what are considered brokers in the NMLS space can actually be lenders with a private lenders such as us.
Of course, everyone is looking for ways to bring in new customers as origination continues to dry up.
And so we are seeing actually some more people coming into our space in terms of some lenders on the NMLS side coming into our space saying, hey, I need other profit centers here.
So what do you need to know about working with private investors? First and foremost, there's no one type of private investor, just as your residential borrowers have their own characteristics and needs.
We consider the fix and flip market a pretty scrappy space. There are a lot of contractors turned flippers. There are a lot of, I wouldn't say that it runs the gamut of who does fix and flips.
Of course, investors are looking to turn their purchase into a profit, but good private investors can adapt to market conditions to meet that goal.
I think that savvy investors have some of each, to do some flips and have some rental properties.
That doesn't mean investors are immune to the market conditions. As rates go up and home sales level off, investors may need to reduce their activity or change what type of purchases they can make. Maybe a fix and flip becomes a rental with a longer-term approach.
We're optimistic about that product for the long term. I think everyone agrees that the next 6 to 9 months is going to be pretty bumpy.
So where do you find investors? For starters, some may be among your existing client base.
Many people who do either fix and flips or buy rental properties are people that also own homes.
You can also find real estate agents who specialize in rental properties. Eventually, you'll get referrals. You might think investors are competitive, but that's not the case.
They're not competing that much. Some gentlemen agreements. They're not going to go after the same house in order to flip or portfolios that they already have. They already own those.
To learn more about working with private investors, listen to The Principal, the Mortgage News Network's daily podcast, available wherever you get your podcasts. For the Mortgage News Network, I'm Mike Savino.
Thanks, Mike. We'll be right back with some more shocking news from the nation's second largest retail non-bank lender.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
loanDepot cut its funding capacity for the third time in 2 months. That brings the total amount of reductions to a whopping $1.5 billion, following the company's announcement it was exiting the wholesale lending business. That decision follows thousands of layoffs and a second quarter loss of $223 million. The company's origination volume last quarter was down 26% from the first quarter and more than half from the second quarter last year. But if you recall earlier this week, the company still gave its top executives raises. We'll be right back with what else is interesting today.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
Welcome back. Here's what else is interesting today. When is good news actually bad news? When the labor market continues to be strong. The Bureau of Labor Statistics reported today that payrolls increased by 263,000 in September, while the unemployment rate held at 3.5%. That could signal the Fed is ready to raise rates yet again when they meet in November. A quick programming note, we'll be off on Monday for the holiday. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.